Hi, I'm Shaun Murison, Market Analyst at IG South Africa. Today we're going to take a quick look at the S&P 500, South Africa 40 Index, the dollar rand, and spot gold. Starting with the S&P 500, this is a daily line graph over a period of about 18 months. We can see that long-term trend is clearly up, as marked by this long-term trend line. The price is also trading firmly above the 200-day moving average, which is our blue line, indication of long-term trend for 6 months plus. What's happening in the short term, price is trading below that 20-period moving average, short-term trend, and below that 50-period moving average, which is a medium-term trend. Short-term being a couple of days to a couple of weeks, medium-term a couple of weeks to a couple of months. Besides the price trading below these averages, there is a bearish crossover where that shorter 20-period moving average is crossing below the 50-period moving average. So the indication there is that we are currently declining. We are currently in a short-term downward move, which is not necessarily over yet. We also have our stochastic oscillator still falling towards that oversold territory. We like that the indicator is confirming what's happening with the price at this point in time. So the favored target, the short to medium term, is 1535. We've got to this price from a confluence of levels. It's our long-term trend line. We've got horizontal support, and it's near to where our 200-day simple moving average is trading. There's potentially another 4% decline from where we are right now. Our South Africa 40 index chart doesn't look too much different. Also a clear upward channel over the last 18 months or so. Price in the short term is falling towards that long-term trend support, which is situated at 34,200 to 34,400. It's also a confluence of horizontal support. The difference here is the price is trading on that 200-day moving average. Over the last 18 months, it's had a habit of slightly breaching that level before rebounding. We've marked it on our chart here, 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 and here. So before committing to this long-term trend as reversing to a downtrend, we want to see the price start trading below that 34,200 and 34,400. The oscillator is still moving towards oversold territory, hasn't quite reached it yet, so it's showing that there's still a potential for further downside in the short to medium term. Our rand has been weakening against the dollar, not only from internal but also external factors. This long-term trend line is firmly intact. The price has actually accelerated away from that before consolidating in a range between 980 and about 1020. At the moment we're seeing a slight breakout of that range, and should that breakout hold, we can measure the height of this consolidation and project it, which takes us to a level of about 1060. At this point we favor the move towards that 1060 level on the grounds of that breakout, but it is highly possible that we tick back here and just extend the size of that consolidation. Another simple chart of dollar denominated gold. Clearly see that we've been in a downtrend in the short, medium term and long term. There was a brief pause in that downward trend as we consolidate into this triangle type formation, which was a period of non-directional movement. At the moment what's happened now is that we've resumed that downtrend by breaking below that lower trend line support. With consolidations like these, we measure the height of that pattern and we project it from the breakout area to give ourselves a potential target. In this circumstance, we find our projection taking us to a level of $1190 an ounce. It is highly possible that we find a rebound. Often with breakouts, we retest the breakout level. And as long as we don't start trading above that 1350 level, we favor a move towards the 1190 mark.